Markets are holding their breath. Are we setting up for a breakout or breakdown? Welcome to Daily Market Waves with Investing Angles, where every candle tells a story and every Elliott Wave maps the future. Today's session cuts through the noise and zooms in on what matters. Volatility Index, calming down or setting up for a surprise. Dollar Index, caught in limbo, no decision yet. Yields drop and TOT bulls cheer, but how long can the party last? Silver, standing on shaky ground, ready to run or fall. Oil, is this a top or just another trap? Uranium stocks, the meltdown continues. Is the case closed? We'll break down the S&P 500 and Nasdaq with a multi-angle Elliott Wave and technical evaluation, plus features of the day, Nvidia and TSMC. What the monthly closures are telling us, are really telling us. JP Morgan, earnings are coming. Will the candles bring joy or a jolt? If you're managing risks, building setups, or staying ahead of the herd, this is your tactical edge. Let's dive in. And as usual, we start with volatility candles. This is what the daily closure is telling us today. So the candle is obviously bearish. However, it's not excessively bearish and there are still chances for moving lower tomorrow. However, this still needs a confirmation. The same thing on the futures side. This is a setup. However, it can be also a setup for a nice tower top if we see a very strong red candle tomorrow. Let's wait for this one and have a look at the bigger frame. The 2-day frame. 2-day frame is more decisive, I would say. This is a nice belt hold. And if you remember our discussions a couple of weeks ago about TOT, a very similar candle formation reversed the trend and brought TOT down a couple of percents in a matter of days. So for the futures, it's a possible spinning top, and in both cases, for the index and for the futures, confirmations are required. Overall, the volatility is slightly bearish for tomorrow, with good chances to extend the ride lower. Now let's have a look at the dollar. Dollar is closing today with technically neutral candles. It tries to hold the rally, and it is right now holding about the 8 days EMA support line, which is the orange line here. At the same, it is holding about the 200 days moving average on the 3-day frame. So technically it's a 600 days. Well, and the closure yesterday of a 3-day candle wasn't exactly very bearish. It pulled back and there is somewhat close to neutral. On the weekly frame, we still have a chance of forming a bottom. Well, let's see how dollar is forming, what it is forming tomorrow. The chances for a move higher are slightly better. Now let's have a look in the bonds market, what yields, bonds, and TOT are telling us. So this is the daily closure of prospective daily closure. The day closes in 1 hour 10 minutes for 2, 5, 10, 20, and 30-year yields. So far, we are seeing very strong bearish candles, continuation candles, particularly on the 5, 10, 20, and 30 years. 2 years is not as bearish. However, I highly doubt it's going to go up while everyone else is going down. So the chances for continued move down are significant. Now let's have a look at the 10-year yield with better precision. So this is the daily frame we are seeing a freshly made 50 by 100 days moving average cross, and it looks like today's candle confirms a break below the 200 days moving average. So this move could be a significant one. And also at the same time, we are seeing a bearish cross, MACD cross. Well, that support, technical support is there. This is the chart that we proposed to our subscribers last week, and telling that this is potential bearish flag. Well, so far it looks like the flag is complete and the targets are aligned. So this is the target. Speaking about the weekly frame, the weekly closed with a strong hammer, and right now 10-year yield is losing its 100 weeks moving average. So far, the chances for continued ride lower are significant. Speaking about 20-year yield, this is the chart that we've discussed already multiple times. A very similar formation, just on the 4-hour chart. Bearish flag. This is the target, 441 to 418, somewhere in the middle of April, beginning of May. Let's see how it moves there. Now let's talk about TLT. What we are seeing is a totally different picture. The daily candle closed with a continuation candle. We are seeing a potential 50 over 100 days moving average cross. This is going to be a midterm bullish 3-day candle. Yesterday formed a strong bullish engulfing. Today is starting to move higher. And if things continue like this, we might see a breakout from this technically neutral candle formation on the weekly frame. All it needs is close above this high. And now let's have a look at the chart. The chart is not as encouraging as the candles. And first of all, I'd like to mention that this is a corrective wave that started way back in January, the end of January. So far, this wave has been an ABC, possible zigzag, and another zigzag here, ABC, and it looks like the final way of this bigger zigzag is forming. When it's going to form, that's the question. So this is the preliminary target for the wave and timing. I think that this is going to be sometime in the second part of April, beginning of May. So far, potentially wave 1 has been formed, and there is a chance for wave 3 here. Well, that's and the target here is between 95 to 98. That's the minimal one. All right, so now let's have a look at our concern. This is the spread, 10 minus 2-year yield. And the candle formation here is way too concerning. So this is the chart that you've been tracking for a while, and the impulse down, the corrective wave up, and it looks like it is accelerating down if the candles don't change. Well, and if it happens, then we will have a major break here, break of the wave, and the chances of moving into the negative territory, perhaps in April or in May. Let's see what the officials have to say about it. That's about the bond market. Now let's move on into the commodities. Today we have 3 commodities to discuss: silver, oil, and uranium. So I'm still waiting for gold to close, and perhaps I'm planning to do another update on gold later tonight. But this is going to be at investingangles.com, posting an update on our website. Now let's have a look at silver and see what silver candles are telling us. So first of all, I'd like to say that this is a very dangerous candle right now. So it's not entirely confirming the reversal on a daily frame. However, it is pushing bearish odds down, and I would like to say that we have a freshly made MACD bearish cross, which might have strong support for the move. Speaking about the weekly, it's still not decided. We need to wait another 3 days. On the 5-day frame, we have a strong hammer, or inverse hammer, or hanging man, and this could be also a harami candle for the green one. The candle that closes in 1 hour 34 minutes is most likely going to be neutral, and we would need to wait for the bigger momentum to see what is going to happen. But all eyes right now on this closure. If today in 1 hour 30 minutes it closes below yesterday low, it would be a confirmation of a top. If not, it's still going to be strong bearish, and the confirmation might come in the next couple of days. Speaking about the chart, this is what we left the chart yesterday, how we left it. So this is potentially wave 2, and we would be looking for potential wave 3 down. So far, it's not decided yet, and this wave could be an ABC with another bigger wave ABC, and I'm looking for talking about this potential formation, something like this, before we can move higher. So far, it's not decided yet. It's still decision pending. And speaking about SLV, it closed today with a bearish candle, breaking below the important support line. This is a concern. However, it's not a grave concern at this moment. 12-hour frame was also bearish, and there is still a chance for moving lower. The weekly is not decided yet. It will depend on how it closes on Friday. So far, the odds are slightly bearish for silver, and we need to wait for a couple of days for a decision. Now let's talk about oil. What is happening right now? The momentum is not known yet fully. The only thing we can see is this daily candle, which is most likely a spinning top. However, we require confirmation, a very strong confirmation. On the 12-hour frame, we see a bearish engulfing, a fairly strong. However, again, it needs confirmation and lots of effort by bears in order to prove their stance. And speaking about the weekly frame, last week we closed with a bearish formation, potential bearish setup. So this week there is a chance of forming a bottom. The weekly candle needs to close about 70.375 in order to confirm a bottom. Anything below would be a failure. And until we know the weekly perspective, we remain neutral, waiting for this decision. Speaking about the Elliott Wave chart, this we were discussing a potential bearish flag. This flag might be extended and went a bit more vertical before reversing. So this wave is still corrective, and the chances for resuming the right downward are significant. But again, I'd like to wait for the weekly confirmation. This is critically important for oil. Now let's talk about uranium stocks. What we are seeing here, and let's start with the monthly closure. So this is the monthly candles for energy fuels. This is the last candle that closed yesterday, and unfortunately it is strong bearish continuation candle, and it is breaking below the 100 months moving average, which is a very rare event, technical event. Speaking about the quarterly frame, it's even more bearish. So the chances for moving lower, I would I'd like to estimate maybe another dollar down, like easily, here on the 3-month frame. And the chances for recovery, well, they are very minor. Speaking about the daily, yesterday Energy Fuels formed a candle which could be a bottom, but today it is negated, fully negated by this red candle. So the path lower is open. If we look at the charts, this is the chart that we shared with our subscribers on March 14th and said, well, that the wave has been corrective, expect a move down. Energy Fuels lost 11% since this call just 2 weeks ago. And the target for this bearish flag is 3.30 to about $3. Nothing changes here. If we look at the bigger frame, also no changes here. This is those who listened to us on February 17 when this stock was about 4.8. They should be doing well. And those who were with us in December 2023 when the stock was $7, they should be doing awesome. So far, the stock lost 50% since that call on December 19, 2023. Now let's have a look at CCJ, Chemical Corporation. And the same disappointing picture here. Let's start with the quarterly frame. This is a strong bearish engulfing, breaking below the 8-quarter EMA, which is very strong move. Monthly also lost the important level of 20 months EMA. This is very strongly bearish. Speaking about the weekly last week on Friday formed a strong bearish engulfing, negating all chances to form a bottom. So now we remove this line. The 3-day candle yesterday closed with a strong continuation one, and technically everything is bearish. Well, we might see a bounce on a daily frame or even on a weekly one, but the monthly and quarterly are excessively bearish. And the chart obviously is also bearish. This is the one that we shared in the middle of March. So far, CCJ is tracking down, and we are not seeing a reversal potential. And this is the long-term chart that we also shared, I think. Oh, it is in the middle of February when CJ was $47. So far, this is the long-term perspective, and the wave A, potentially wave A, is still developing, so we don't know when it stops. This is only a projection. And I'd like to mention that this is a log scale. This is not a normal one. All right, so that's all about commodities, uranium, and now let's talk about markets and stock market. And we start with the candles. As we discussed yesterday, today there was a potential for a bounce, and this is exactly what happened for SPY, QQQ, DIA, and IWM. Nasdaq and SPY, they moved up. Dow Jones and IWM, they are still thinking about it, perhaps forming a stronger bottom. Well, we are expecting a bounce to continue. However, it's not going to be a very strong one. And this is one of the reasons. First of all, we have 15-day frame, and this is the MACD cross that happened last time. So this on February, on March 31st, it didn't change and extended. Quite the contrary. And now we are looking for this particular target. That's what we did an estimate and run statistical piece. If you're interested, you can read it at our investingangles.com in the S&P 500 weekly reports. 400 4,300 is the target for S&P. And things are getting worse right now because now we are seeing that the monthly MACD also made a cross. Even though we still need to wait for a month until it confirms, but nevertheless, it is a very bearish move. Speaking about Elliott waves, this is what our chart looks like, and this is what we left it yesterday. So what we are seeing is, first of all, the wave is corrective here, and it is climbing towards 5720, which will technically invalidate first of all the blue count and most likely the red one too. So this will leave us with the purple count. And as wave is corrective, I suspect that it might be forming an ending diagonal for this wave C of B, and it might take a couple of weeks to unfold. Let's see what happens. If we look at the sectors, financial, technology, industrial, they are slightly bullish. I cannot say they are fully bullish, and consumer discretionary made a bullish move, and also the energy. Energy, by the way, is more neutral, I would say, and it's 94. And oh, it closed exactly at the yesterday's low. I think this is bearish. We should expect a bearish move for energy starting tomorrow. Utilities climbing up. Consumer staples are somewhat neutral. Perhaps they can move down. And a very strong bearish move made the healthcare. So no unison on the sectors. However, slightly bullish, and there is a good chance we will see an advance tomorrow. Speaking about the large stocks, Microsoft made a very nice move, and Meta, Amazon, Apple, everyone looks slightly bullish here. However, I would like to mention, for example, for Amazon, while this move is bullish and we might see a rally here or at least a bounce, this is a freshly made 50 by 100 days moving average cross, and I think it appears for a reason. So the rally or a bounce could be very limited, maybe a few days, maximum couple of weeks. Similar for Microsoft, which has a bearish alignment of moving averages, and for Google, which crossed 50 over 100 and right now is on track for 50 over 200. Speaking about Nvidia, we will do Nvidia in just a few minutes. This is our special feature of today. And talking about Tesla, Tesla is slightly bullish. However, if you watched our video a couple of days ago, we discussed the Tesla and its Elliott Wave. From Elliott Wave perspective, we know what to expect, and this is an unhealthy wave if we look at this from that perspective. Now let's have a look at Nasdaq. Technically, we are expecting somewhat similar for Nasdaq. However, the wave could be slightly different. This might be the very first wave, while for S&P 500 it would be wave C. For Nasdaq it could be wave A of B. Let's see how it develops. And at this point we are still holding our breath for potential wave 4 and wave 5 of a higher degree, which would be a huge impulse, and wave A. Let's see what there are quite a few options right now here, but all of them are bearish at this point. And now let's have a look at our features of the day, and we will start with Nvidia. Nvidia daily candle are somewhat bullish with some chance to continue higher. However, I'd like to emphasize a very strong bearish crosses here, 50 over 200 days moving average death cross is gonna hold this rally. I think that most likely it will be something like this, like wave here, another wave here, and then a continued wave down in market with a slightly yeah, something would no. Yes, so this would be a possible path. Speaking about the weekly closed with a strong bearish candle continuing down. The monthly closure was plain bearish, no questions about it. And if we look at the quarterly frame, it's even more concerning because we have a very strong entire bearish engulfing for the quarter. And this means that we might see bearish moves for at least 1 quarter, if not longer. Now let's have a look at the wave. This is our chart that we shared with our subscribers on December 27th, saying that Nvidia is forming ending diagonal and it potentially has only one wave to go higher, make one more higher high, and after that it will be a decline. So this is exactly what happened. Nvidia made an all-time high on January 7th, and after that we are seeing potential impulse down. So this wave 1 could be a leading diagonal. Maybe change it to a slightly bigger degree. Potentially a leading diagonal, wave B or 2, and now we are looking for an impulse to continue, potentially wave 3 going down. That's the perspective. Speaking about this one, this is an interesting chart. So this is a 10-day frame, and Nvidia formed a MACD bearish cross long ago in December, and this is what we were tracking, and this is our technical estimate, statistical estimate. We were saying that Nvidia had a very good chance to drop 20%, and the next level would be 49 and 80. Well, these are, so far it's down 28% and it's on track to the next level. Let's see how it goes and what kind of surprises we get here. So this is the technical estimate for Nvidia. Now let's have a look at TSM. So first of all, I'd like to say this TSM closed also the quarter with a strong bearish engulfing. The monthly candle is a plain bearish continuation, breaking and confirming the move below the 8 months EMA. Speaking about the monthly chart, this is also very concerning. A freshly made MACD bearish cross on the monthly chart. Well, and this cross is way higher, way bigger than the previous one. It's, let's say, it's about 25%. Let's do some quick estimates. Let's say the previous cross of this degree, it made TSM to lose about 60%. So this cross is 25% bigger, plus 25%, it's gonna be about 75. Well, that's an interesting number. So if we look, for example, for 60% drop for TSM, it would be somewhere around the 100 months moving average, the purple line. If we look at the 75%, which is also possible, this would be around 200 months moving average. All right, so it looks like a game of take your pick. So far, both this cross is significant, and we would be looking for a very strong move for TSM. And speaking about Elliott Waves, this is the chart that we shared with our followers on January 27, when TSM potentially completed an ending diagonal and made the first move when the stock was 192. So far, the stock today, as of today, it's 178, and it already lost 25%. And we know what we know about ending diagonals, that they tend to return to the level of origin. And no matter what the other people say or estimate, this is a very good chance for TSM to move lower toward this level. And I would say it's not necessary need to stop here, so it might go lower. That's the perspective for TSM. And now the final feature of the day is JP Morgan. Let's start probably with the candles. So the candles are concerning at this moment, and I would say that JPM closed with a strong inside down candle. However, it could be stronger, but nevertheless, it's powerful enough to drive prices down for the next months or longer. Speaking about the daily frame, right now it's potentially forming a mini bottom here. If we look at the other frames, 10-day frame, for example, is bearish, and the 15-day frame is also strong bearish. The weekly one is neutral, but this candle, the last week candle, technically canceled the rally. So we would be looking for some consolidation here, probably horizontal move before moving lower. Now let's have a look at the short-term frame. This is what we discussed previously, and it's a very interesting frame. So I would say that this wave is a bit too high for wave 4. I think we can remove this for now and start looking into potential zigzag here. So this is an ABC, clear ABC down, and the wave up here has been corrective. So it has only 3 waves, and I would mark them as wave A, B, and C here. Now we potentially have wave B, and we would be looking for wave C here. Well, now if we use some geometrical shapes here, we can try to evaluate where it's gonna go. And now this is, not this one. If this is a classical zigzag, so it might get this shape. Just this cross. It falls exactly on February 11th, 8:30. This is the day and time that JPM is going to report their earnings. So we might see an apex here, wave C, and after that there is a very significant chance, I would say, that investors will be disappointed and we will see wave C starting here. And if we take another geometry line here, so this would be something like this. Well, and the target, we will talk about the target once we have exact closure here and exact reversal. So ABC down, another ABC. Well, that's the perspective for JP Morgan. And now let's have a look at the bigger chart. This is what we shared on updated last time when it was on March 11. So this is the perspective. This is the chances for JPM. If we see a wave like this, so this might be an ABC here, ABC, potentially forming wave 4, and we might see wave 5 going to the new all-time high for the stock. Well, that's the perspective. This is what candles and technicals are telling us, and I hope you enjoyed this presentation. So, from volatility's cool down to silver moments of truth and the silent warnings flashing on uranium and oil, today's waves are setting the stage for April major plays. So, is this the calm before the storm or just a shift in tides? What's your take on JPM before earnings? Are Nvidia and TSM telling the truth in those monthly closures? Drop your thoughts in the comments. Let's compare notes. Test your edge with our tricky quiz questions. If you like what you saw, smash that like, ring the bell, and subscribe so you never miss a reversal before the herd even blinks. Huge thanks to all our subscribers, especially our newest ones. Your trust drives every chart we draw. And if you are ready for real-time setups, join our private Discord led by Master Trader Kyle and Swing Trade Pro David. Until next time, stay sharp, stay objective, and happy trading. Only at Investing Angles, where we chart the turn before the herd even flinches.